What's going on, traders? We are back here. Even I Can Trade. Thank you for tuning in. In today's video, I want to take you through some back testing and back channel work that I do to stress test my strategy, kind of walk through making myself comfortable that it's going to work. And one of the things in that process is back testing. Now, the thing about back testing is it's notoriously inaccurate for several different reasons, and especially in strategy that I implement with spreads, and especially spreads that you enter in market specifically, that I haven't found a back test that I can get the entry right. That where I can kind of tell the back tester where to enter the trades and all of that kind of stuff. So what I've decided to do is use thinkorswim's on demand function to kind of rewind the clock and see if we can do some semi live trading based on live data. Now, it's not going to be perfect because I normally use TradingView and a couple of other different tools that you know about to enter trades, but I'm going to try to see if I can get some sort of good data out of it. I'm just going to go back into a random period in 2022, since that was a negative year, and kind of stress test my rules, see how it turns out. So it's going to be a little bit of a longer video. I appreciate all of the new subscribers. The channel has been growing at a higher pace lately, so I really appreciate everybody who is a new subscriber and even trying to hit this mark right here. Okay, watch hours. All right, so every second more that you watch the video helps this metric. So I'm asking you, if you're still here, I ask you if you can watch a little bit more of the video than you normally would. Just wait before you click off on it. Every second counts as far as trying to build this up so that I can monetize a channel. Right here is going to show you something that I think is very important. It's something I was missing for a long time. When in this world, we do a lot of fancy calculations, a lot of compounding calculations. You know, I love my compounding. And we do a lot of projections to say, if I'm able to do this, then I'm going to get that. Right. But the trouble is losses, especially in the world of spreads, have such a massive impact on your overall profitability because the losses are so much bigger than the gains. So you spend a lot of time building up gains, a little bit, then you have one big loss and you slide backwards pretty far. Well, if you slide back too far, then that's going to stunt your growth and even put your growth into reverse. So it took me a while to really find a good formula, a good way to look at a projection that included losses with that. And this is what this particular spreadsheet, this particular formula gives. So in this particular example, you have $8,000 at risk. Okay, you've got, this is what you're actually literally trading with, is $8,000. You may have more cash in the account, but you're not going to risk more than $8,000 or put more than $8,000 towards a trade. Okay. And you do 240 trades a year. Now there's about 255 trading days open, but I picked 240 because you've got, about 8 or 10 foam C's out there that I'm just not going to trade. You might have a day off or a holiday or whatever that, you want to take an extra day off, whatever. The win percentage. Now this is a stickler right here because you're really going to need some real world data on your win percentage. You can kind of estimate it. Most people use delta to kind of give some sort of number to this. If you really haven't traded, it's a okay. Delta's okay, but it's not perfect. But it's something that you can start with per trade. So this is the amount that I'm trying to win per trade. And for me, I'm trying to get about 1.5% on average on my winning trades. Stop loss multiple. So this is going to be the multiple of how many times your winning trade that you're willing to risk. So I'm willing to risk right now. I told it that I'm willing to risk 4 times my profit. So given this input, if these numbers hold true, then I can expect 204 winners. I can expect 36 losses. I can expect this amount, total win amount, so about $24,000 throughout that particular year. I can expect to lose about $17,000, and when it nets out, I can expect to profit about $7,200 all out. Okay, so that gives me a dollar win-loss ratio of 17-3, and basically what that means is if I reduce 204 trades winners and 36 losers down to the lowest common denominator, that brings me down to 17-3 as far as a win ratio. So basically for every 17 trades that I win, I'm going to lose 3. And for my purposes, that comes out to 20 trades, and that's about a month worth of trades, which helps me psychologically think in my head, okay, so as long as I lose a little bit less than a trade a week, then I'm going to be profitable in this particular strategy. And that gives me an annual at-risk profit of 90%. So in other words, out of my $8,000 at risk, I'm going to have a profit rate of about 90% off of this money. Now, if you want to look at it from a holistic portfolio, so all the money that you have in your account that you're utilizing towards your strategy, then you can look at this column. And for me, I'm going to say that I'm going to have about $18,000 in there. Out of that $18,000, I'm risking 43% of this total money, which gives me my $8,000 at risk. My annualized portfolio profit, so basically my profit, this $72,000, what does that mean for my portfolio? That means I'm going to win about 38% for that year. Again, I'm breaking down these trades as far as a monthly trade, and this is where I get those monthly trade numbers. This right here, this is really where the rubber meets the road for me, because I think in my trading game, as like weekly is the easiest way for me to kind of digest everything. And this tells me, like I said, as long as I have, as long as I'm winning, as long as I'm not losing more than a trade a week, or, I have, maybe double up 2 weeks or something like that. But, I don't want more than a loss per every week or a little bit less than that. Then I'm going to be profitable, right? And I'm comfortable. Okay. So profit per month, this will give you what you can expect to profit for that particular month. Now, and you've got larger numbers like your profit per month for your portfolio and all that kind of stuff. So like I said, this is where the rubber meets the road for me. Okay. So I can focus in and keep this in my head at all times, as far as when it's time to make a decision, or when I'm placing the trade initially, how safe do I want to be? How risky can I afford to be? All of that stuff, it plays into it because I have this right here locked into my head. Okay, maybe it's Friday and I'm, all green. Maybe I'll take a little bit more risk, or maybe I'll slow down the risk a little bit more, or whatever I decide. I have this data in the back of my head to say, okay, this week, here's where I'm at. Here's what I can afford to do, and here's how I want to play it based on that. So I wanted to show you this, and since this is new, and this is a very realistic look at how my trading has actually gone, because this win percentage is just a little bit more conservative. I'm actually closer to 90%, but this gives me a realistic look at what my profitability is going to be, what I can expect to make at the end of the month or end of the year based on how I'm trading, instead of expecting, these fantastic numbers like making, doubling and tripling my money in like, a couple of days and being able to live off of that. This is a more livable number, a livable expectation based on options trading, which this is fantastic, right? I think it's really, really good. My overall goal is to get, about 30% per year, maybe 50% per year if I'm lucky. But based on real world results, this is going to get you really close to real world results. if your input is real world. Or enough about that. What I want to do now is get into this, pick like a random date in 2022, whatever, and I'm just going to use our chart right here to kind of pick trades. And I'm going to do a few trades, kind of try to fast forward through them, and I'm going to see if we can reproduce these results and see if my strategy is going to be successful based on this limited data. And we're going to start, that's fine, 9:56. Use this is my secondary chart that I kind of pay attention to throughout the day right here, because it's got, the reason why I like this chart is because the pivot points, I can see the next day's pivot points on here, which I can't see that on TradingView, but I use this to help make a decision throughout the day as far as where my position is going to be, because I want to be above the highest R3 and I want to be below the lowest S3. If I also can't see if this is a Fed day or a FOMC, whatever, or if I can't see any news. So I'm kind of handicapped here as far as how I would actually be trading, but I'm going to try to do my best and see where we end up. The market peaked up here at about 42.33 and we're at 42.10, so it looks like we're approaching that 42.30. So it looks like a good time to get into a call. We've got our stochastics agreeing with our assessment at this particular time. Right now it's early in the day, so we should be able to get a pretty far away strike. I also cannot see my expected move number over here, so that's another handicap that I have. But we're just going to go in and do our best. I'm going to go and look at our next day expiration right here, and let's take a look at our call spreads. So I want a 10 or a 15 cent. So there's our 10 cent. That's at 43.20. Let's see, that's way up there. So that looks juicy. Another check I like to do is to see our largest pivot point spread. I want that to be at least 100 points wide. So we're at 42.67 and I'm at 40.92. So that's at least 100 points. So this is a valid pivot point spread for me. So our 43.20 is way up there. So I think I'll actually drop that down to maybe 43.10, especially since the market looks like it's going to go, we're running back up into the highs where we were. That should provide some resistance at some point. So I'm going to look at 43.10, 43.15. Let me see, we had 43.20. Is this thing okay? So we're not fast forward or anything. So this often happens, I'm looking at a price and I see a juicy price, and when I'm doing my analysis, that price goes away. But we're here right now at 43.15. So I've already got my 8 set up. I've got 15 cents on the board. I'm going to hit my lock button. This is another thing that you want to pay attention to, because I often forget to hit the lock button on thinkorswim, and I will get a lower price than what I think I'm getting when it actually comes to fill. This lock button is very important to lock in your price, because otherwise it will slide on you and you don't want that. So go ahead and punch this. Make sure we do one final check, because once you submit it and it goes through, there is no undo button. So I'm looking to make sure everything looks like I want it to. We're going to make 120 off of the trade. Buying power effect is here, and we're going to send it. Just because this says a specific number does not mean you're automatically going to get filled at that number. The market has to choose to fill you. If you want an automatic fill, you've actually got to go to the bid column and pop in that number. This is the mid number right here. So this is between the bid and the ask. So the market makers do not have to fill you at this particular number. Usually you'll get filled at this number if the market is pressing toward, there we go. Usually you get this number if the market is pressing towards your number, or if somebody puts in a market order on the other side, then you'll get filled. But other than that, it's a waiting game trying to get filled at this mid price right here. All right, so we got that fill. So what I'm going to do is I'm going to go forward in the day, because what I want to see now, what I'm hoping is that since our stochastics is up here, we're over into the overbought territory. What I'm going to hope is that the market reverses a little bit, and then we can get a trade-off below this mark where we got filled. I want somewhere down here, anything down here, where we can get a put spread trade-off. So that's what I'm looking for, is a reversal of the market to come back down, and we can get a put trade-off at a better position than we otherwise would, other than just placing a blind iron condor where you place a call spread and a put spread at the same time. That's madness to me. So let's take a look and see. We're already getting the market drop right here. We've already got a red bar, so I love to see that. So let's see if we can get some continuation and see if we can get the stochastics to come down even more. So I'm just going to fast forward this an hour. Close enough. All right, so something like that. So we got a little hook. Now, one consideration, and this is where you have to kind of get a feel for things. This right here, you have to also think about your Elliott wave theory, where you have your A, B, and C waves going on. So this is only your first down wave right here after a rise in the market. Now we get a reversal. We're only on a B wave. That means that we are likely to get a C wave, which is going to be further down from this. But I also have to weigh time in that. So it's an earlier in the day trade. So I have to weigh and see, is it worth it to get in a little bit earlier, knowing that we could get some further negativity in the market? Or do I want to just go ahead and get it in and get that extra time? Because time in this game is space away from the market because of theta. So do I want to get that early trade-off, since this is coming into where I want it to be? But it's perfectly valid either way. It just depends on how you're feeling and your sense of the market. So you have to watch those things, okay? So for me, I'm just going to go ahead and put in this trade at 40.90. I'm going to look around and see if that's where I really want to be. So 40.90, right here we're at 40.95, 40.96, so we're below S3, which is exactly where I want to be. I could probably get into a better position. Oh, some things open up. We got like 40.80, 40.85. I don't think this 40.80 is going to fill because it's just too close to the edge. So I'm going to try this 40.85. I like that even better. I'm going to hit my lockdown here on my order. I'm going to go ahead and send it. Everything looks good. And I'm going to send that off and see if we can get a fill. Sometimes the market has to come back to me to get that fill. When we're looking at the mid price right here, the market coming back to me would mean that the market drops back down a little bit. That's going to put a little bit of pressure on these puts, and that oftentimes when you get a little spike down or something like that, means that your put is going to get filled. Down there we go. All right, so we got our iron condor on. We got a great position. We are outside of our S and R3 numbers for both days. We got our call off at a really good spot. We got our put off at a decent spot, not perfect, but who knows what the market's going to do for the rest of this day. So what I'm going to do is now, good practice, we're going to put on our stop losses. And for me, my stop loss is currently going to be at 60 cents. So you have a choice here as well. You can either put on the stop as a full iron condor, or you could put on a stop on each leg. Either way is up to you. I tend to like stops on each leg just because it costs less to close out, but sometimes I'll put on an iron condor stop loss if I'm lazy. But we'll see. We'll just go ahead and right click in here, put this stop loss on. We'll pop it in at 60 cents and we'll confirm that. Oops, we got to change all this too as well. Good till cancel, so it lasts till tomorrow, and we'll send that, and we'll put on a stop on this leg. Got our stops on. The market's doing what it's going to do, so we're going to fast forward till tomorrow morning. And oh, nice. So let's see. So here's where we entered our orders. Previously, you can see we entered this little swing high, this little swing low. So let's see. The market definitely jumped up on us. I'm pretty sure this was like this right here was some kind of announcement, which is exactly what I said I was afraid of with doing this kind of thing. So I'd have to look back into history and kind of see what this was, but you can hear that we did get stopped out on one of our trades. It was definitely our call spread. Let's see what the damage was. All right, looks like $500, something like that. 584, whatever. 584. That's our damage. First trade. I hate it. Don't you hate that? It's really a punch to the gut when it's your very first trade, but that's trading, right? So our stop loss did come into effect. It did work. Now, if you get the reason why you want to have that stop loss on so early, this gap right here, you want it to close out ASAP if you're going to do this. Even better if you can trade futures like this, but futures trading is very, very expensive on TD Ameritrade unless you have negotiated rates, right? But if you don't have negotiated rates and you're trading SPX 1DTE, you know, this is as bad as it gets right here, okay? So you got your armor on, you got your stop on, you're going to stop out as soon as the market opens. That's fine, because if it's gapped up like this, it's probably going to be a gap and go for at least a while, right? So let's check it out, see what the damage is. So let's see, is that this is the call. So now our numbers at 43.15, the market's currently at 42.96. It's possible that the trade would have worked, but do you want to stick around and find out? We could see that the market continued to go up. This is almost certainly a Fed day. But I'm kind of glad that we saw this first, really, because started out with the loss. So you can see the loss. You can see the lost trade. It was actually an 88-cent debit, turned out to be. I'm not sure that's because we skipped so far into the day, or that's what it would have been. Not really sure which. But look, we would have been breached. We would have been breached on that trade had we not got stopped out. Now, it wouldn't have been a terrible breach, but it still would have been a breach as far as going through our strike, and we don't want that. So stop loss, stop loss, stop loss. So let's see if we can recover. I didn't put on a new trade this particular day, but let's see if we can get into the next day and actually recover from that loss. So let's rewind this. Fast forward into the next day, we can see the market gapped up yet again. And it looks like it wants to be another gap and go. So let's check out where we are and what we want to do. Something like this, I'm probably keen to wait this out a little bit to see if we top out. But let's see where the trades are at, kind of get an idea. So this is Friday, so this will be an over weekend hold. Let's see where we are on the call side, because that is the strong side. And calls, we would definitely want to give that a little bit more room, considering the sentiment of the market. So I definitely want to cheat to the upside. That'll give me 44.40. 44.40 would not put us over the mark as far as getting over the third pivot here. But it looks like we've got some resistance coming in a little bit above 44.40 that might help us out. So if we, looks like we can actually get to 44.35 right now, which is well above where we want to be. I thought that sounded a little crazy. But I want to give this a little bit of room to run, see if we can get some red bars here. So now we can get 44.50. 44.50 puts us well above where we need to be. That's almost 100 points. I'm still not seeing any signs of slowing down, so I'd really like to see some red up in here first before I jump into this particular trade. Okay, so yeah, it looks like 44.50 still open. I'm gonna go ahead and take that. I'm gonna pop us in that 10-cent trade. Let's make sure it still says 10 cents. It does. Send that off. There we go. All right. So let's make sure. So this is going to be our call, the 6th. There we go. Now, like I said, we can still get that number 3 C wave push up beyond this and push to a new high. That's normally fine as long as we don't have any news, killing our trade or anything like that. So I'm going to press forward, see if I can get a put spread in as well. And I might cheat up on the put spread because definitely the market sentiment is absolutely on the positive side right now. So, all right, there we go. All right, so like I said, I'm gonna try to cheat up a little bit if I can get it. 41.95. Let's see. 41.95 puts us below that S3, which is fine. It's giving us 15 cents. I'll take it. Okay, not 15 cents. So sometimes this stuff, until you click on it, it doesn't update sometimes for whatever reason. So now I'm going to have to click through these to get updated pricing. I hate when that happens, but it is what it is. Let's see, 12 cents, should be getting close. So let's see if we can get 42.30. We'll pop it in. There, we got it for 15 cents. So let's go ahead and pop in our stops. So let's move to the next day. All right, so looks like we stayed in a decent range so far. So we're gonna see what our numbers look like. Again, you can just watch your stops up here. We're already at a 0 and a 2, which is basically 0. So if these trades work out, oh, one other thing, with paper trading, expiration works, or I should say it doesn't work at all, really. Expiration doesn't work, so the trades are just gonna stay there unless you manually close them out. So that's something that I have to keep in mind. So you see how it says -4 days right here? It's because I didn't close this trade out, and I don't think that I can now. I don't even think I can delete it. But going forward, I have to remember to delete or close these trades out. All right, so we can see that this trade looks exactly like we want it to. We're on all zeros very early in the day. It's only 10 o'clock. So this is exactly what we need to see. The likelihood of the market going up or down like 100 points in the middle of the day on a non-catalyst day, very slim. Not that I would take my stops off until the end of the day or anything, but just basically this trade is 99% chance it's going to work out if I fast forward through it. What I'm going to do really quick is I'm going to pause out the video. I'm going to go back and delete this trade and close out of this trade so I can move on to the next day. So let me go do that real quick. Okay, we're back. So I fixed that other trade, and what I'm gonna do now is I'm gonna look for some new trades for the next day. So we've got one loser, one winner on the board so far. You can see we're behind where we started by a little bit. We started 100,000. So let's check out and see if we want to trade. So we're not ready to trade yet, but the first trade it looks like we're going to get a shot at is a put trade. So we'll see if we can skip forward, find a decent put trade here. All right, so it looks like a put trade developed for us here. We've got our hook in the stochastics here. Looks like we got a decent reversal. So Let's see where we want to be. Right now, I can tell that the pivots are pretty wide. So those are valid. The next days aren't valid yet because the market really hasn't done anything. So let's take a look. So let's go ahead and go for it. 15 cents. See if we can get a fill real quick. See if the market moves back. There we go. So we got our puts. Now let's look for a call above 43.64. 10 cents right here, 44.25. It's towards the end of the day, so I don't think we're going to get above today's 3 level, but we'll get above tomorrow's 3 level, which is fine. Where are we at? Right here, 44.25. I'll take it, 10 cents, lock it in, load it, and shoot it. Stuff like this, that backtesting, like normal backtesting software, I mean, I just don't know how you would even program this in to a backtester, let alone have a backtester capable of being able to do this stuff. There we go, finally. All right. Another thing to watch out for is on demand does 1 cent increments where the real world does 5. So this got filled at 12 cents. That wouldn't happen in the real world, so just keep that in mind. I'm going to close out today's trades, which are right here. The good news is I can close these out for 1 cent instead of 5 cents in this environment, so it's almost like 0 cents since I can't let them expire by themselves. So that's pretty cool. So we've got one or 2? I think that's 2 wins down. I think. Yeah, we lost on Thursday, 1 on Friday, 1 on Monday. So 2 down, 3 more to go till we're back in black. Pop this in, close that out. All right, so we're positioned. I just have to put on my stops. I'm not, for the sake of time, I'm not going to put on a stop. You just know that I would put on stops for these. I don't feel like setting all that stuff up 100 times. So let's go ahead and fast forward. So unless this explodes here, we're going to be just fine. And if I felt like it was going to explode, I would just close out now. On where are we at? This would be a call spread that would be in danger. So yeah, if I felt like we were in danger, we're at what, 44.20, so we're way up here. If I felt like it was going to be in danger, I would just close it right now for a profit, but I don't. So we're going to look for an entry, and that could change at any time. Like if we get maybe to, you know, our 1.5 right here, then maybe I'll just close it, but I don't think so. All right, so let's see. Let's just check out where we are as far as calls, because it looks like calls are going to be first on deck. And call wise, we want to be 44.10, 44.20 again. 44.35 is open, which means 44.30 could be a 15 center. Now, early in the day, really early in the day, and really late in the day, some rules you can bend as far as looking for stochastics and everything like that, because the market could still go up. But since it's so early in the day, we've got a lot of theta that's going to cushion us from a lot of the daily goings-ons, so to speak. So this, I might go ahead and take this so we can get that 44.35 or 44.30 way up here in the stratosphere. And I think I'm going to do that. So let me go ahead and get that 15 cent locked in, send it, and see if we can catch it before this red bar gets too much of an issue. It looks like it already is. But maybe it'll rebound and we'll get it. We'll see. Doesn't look like it. So let's adjust, get that to 10 cents. Now don't forget I got this thing on fast forward, so the market wouldn't be moving quite this fast, but I'm gonna put it in. All right, we got it for whatever, we got it for 14 cents, whatever, okay. Whatever. All right, now it's the puts turn, so let's skip through, see if we can find a good put entry. This is what I was talking about with the next day's trade. You know, you have to gamble on it a little bit to see, is it worth it to see if we get a spike up like this that's going to really hurt us, or is it worth it to take advantage of the theta that's built into the day to get really high up into the stratosphere if you can. So we haven't lost the gamble yet, but we're getting close, as you can see with this pivot point right here. So yeah, we're looking, I'm just going to go ahead and close this while we're ahead. Actually, let me see something. I'm not going to close it because we have this right here coming through. This trend line, downward trend line coming through, that's going to cut off the market. I drew this for a reason. So I'm going to trust that and see what happens. Now, if I was being more conservative, I would close it. Honestly, this is the time to close it. Just close it for, you know, even. But I'm going to let it run. I'll set a good example for you guys. I really am. I probably wouldn't close out, but because this is being recorded, because I got to set a good example and be a good boy, I am going to close this out. There you go. 305, 15 cents. Lock it in. Uh-oh. See, look at that. If you don't lock it in time, now we got to go back up to 15 cents. Or do I actually want to try for 15 cents? I'm going to give it 10 cents. So we can get in. All right, locked and loaded. All right, so let's see if we can wake up these prices and see if we can get some real numbers loaded in here. Is that real? I guess so. All right, so I want 43.10 or 43.15. So I'm okay with that. Let's give it 15 cents, lock that in, and let it fly. There we go. So we're at 43.05 right there. So let's see what the market gives us, see if we can get a call spread in. Currently at 43.73, so hopefully the market decides to go up at some point, and of course not. All right, so 44.40. Can you give us at least 10 cents, buddy? Give us 10 cents here. Go ahead and put it in for 10 cents and see if we can get the market to come up to us. And 44.40, 10 cents. Let it fly. Oh, there. Okay, we finally got it to fill. So we're at 10 cents, 44.40. So we got our full IC iron condor on deck, and we actually did get a little bit of space, I think, between the put and the call, so that's good. And let's go ahead and close out today's trades, and we'll move on to the next day. So here's the next day, and you can clearly see that the market didn't really go anywhere, and our P&L is up. Our put is at 5 cents from 17, and our call is at 2 cents from 10, so we're definitely all ahead. And you can see we're back in the black, above 100,000 on our cash sweep vehicle. This is the number that tells you where you're going to be at once your current trades, if your current trades expire worthless, you will be at this number right here under the cash sweep. Your current value is going to be under the net liquid. Okay. On this screen, the net liquid tells us how much more we have to go. So we've got $60 left total in our trades. And, you know, we're currently at this particular profit right here. This is our 5th successful trade. And you can see that we've more than made up for our one loss. That goes back to what I was showing you with the spreadsheet. So you can literally count your wins and losses if you stick to your stops even though our stop hit us for even more than we put the stop in for, we still are back in the black by our 5th trade. So that just goes to show you that the math works. So we're just going to go through a couple more of these just to see, but you can see how systematic this type of trading is, right? You're just doing the same thing every day, looking for a good spot for a call, looking for a good spot for a put, avoiding foam C's and obvious announcements and stuff like that that might rock the market. Outside of that, I mean, holding overnight is not really an issue. And notice I'm never trying to get as much premium as possible. I'm only trying to get 10 to 15 cents. That's it. Before you just go ahead and punch this in. Oh, now I want to get 15. Okay, we'll take it. And if you're gonna give it to us, pop it in. Situation developed here. So midday looks like some bad news came through, whatever, not sure what, obviously, but the market tanked and is falling right on top of our put here. We're not in any real trouble yet, but we are 20 cents away from our stop, so I decided to go ahead and actually put on the stop loss for this one just so we can have it on deck, and we're gonna see what tomorrow brings and see if we make it. All right, so you see the next day we gapped up pretty strong. Looks like that drop was overdone. The market always has a tendency to want to try to gap fill, but what I would probably do, if I'm being honest, I would probably just leave the trade alone, to be perfectly honest. But if you want to play it safe, you could take this gap, close it out, either for even or a little bit of a gain, just up to you. I'm gonna leave it alone because I think it'll be fine. So let's look for, I'll probably do maybe 2 or 3 more days, see what we get out of it. So let's see if we can get a trade on for today. Okay, so it looks like the market wanted to completely reverse direction here. And what I'm gonna do here is I'm actually gonna go ahead and get in a call spread here because we've had a couple of pump fakes here, and I think the market doesn't have too much left in it as far as pump faking here. We're up pretty strong. That usually means I'm going to get a pretty good number as far as a strike way up here. You can see the next day's pivots are already above the current day's pivots, so I'm going to see if I can get something at least 44.80. So let's see what the market's giving us, and it's not giving us quite that yet. 44.65 is what it wants to give us, and we're at like close to 4,400. That's borderline, but if we can't get it on a spike like this, if the market's on the way down, I don't know if we're gonna get that decision. Okay, so the market did actually continue to go up, and I think I'm going to go ahead and take this right here, just looking at the trajectory of it. It could end up at 44.19, even if we get a spike at the end of the day, maybe 44.30 or something like that. Our current strike for today is 44.55. Yes, 44.55. Another thing that I look at is, can we get above our previous days or outside of our previous day's strikes? Now we can with a pretty comfortable margin. So now I'm at 44.80, which is where I originally said that I wanted to be. So I'm gonna go ahead and take this if it's still there. Yeah, so I'm gonna go ahead and take it, see if we can get filled. Oh, immediate, look at that. We're gonna give up our puts today, it looks like, unless we get a rejection off of this R2 right here. It's unlikely that we're going to get a put trade off, but let's skip through and see. And here at the end of the day, the market did continue to trend up, although not quite as strong. I'm not really comfortable trading puts underneath a trend like this, although that is a viable strategy. It's just not something that my brain likes, but it's something that you could certainly do. That's why I'm mentioning it, is to go kind of counter trend with your trade and just sell puts underneath a strong uptrend. I'm not going to do that here because I would be true to myself. If I was going to do it, I would do it probably at the end of the day. There's that spike that I was talking about that might come. If I was going to do it, I'd probably do it at the end of the day, and hope that that works out. My mind just doesn't. I don't know. I don't like selling puts on up days or really strong uptrends for some reason. But it's certainly viable because the market's moving away from you, which is exactly what you want. Yada yada yada. I'm just afraid of rebounds, I guess. But you certainly could. So okay, this is more my speed. So just like I was afraid of, we got that rebound off of the morning right here. So we're kind of sitting low off of all that exuberance from the previous day. So what you could do right here, you could just do a 0 DTE, which, am I gonna do that? Yeah, why not? I'm gonna do a 0 DTE right here as soon as the market lines up. Now it's even more important to follow your rules on 0 DTE. The rules do apply at the beginning of the day for 0 DTE, just because of that time difference. So I'm going to see if I can get a 0 DTE opportunity in here, and maybe even also a 1 DTE opportunity right here off of this negativity. But I do want to flesh out and see where this negativity stops. But that's the plan, is to go ahead and get in once we get a curl back into the normal range on stochastics. Okay, so this is good enough for me where it looks like we're about to cross into the normal zone. I could be a little bit early, but that's just my personality. So I'm going to first look for a 0 DTE, see if there's anything on the table. 43.50 puts us mid. I'd rather 45, but we're not going to get that right now. So I'm going to go ahead and 44.50, put that out there, see if we can get it. So we got a red bar, so we might get it. And I'm going to look for a 1 DTE as well at the same time. Looks like we are going to get it. 1 DTE, give me a 43.10. We did get that 50. So let's look for that 10, 43.10. Dang, is that really? Jeez. That's okay, that makes more sense. 43.10, that's down there, that's deep. So we're gonna get that 43.10 off, and we're gonna get 15 cents for it. That should fill. There we go. So I'm good with that. So we got our 1 and 0 DTE in to complete today's iron condor and start tomorrow's. So we're gonna see if we can move to the call side, get the stochastics to the top side area, and let's see what happens. All right, so that worked out very, very well for us right here. Getting in early like that. Doesn't always happen like that, but sometimes it does. And we're gonna do the same thing right here. We've got the stochastics looking like it wants to fall back into the zone. We've had a little bit of wishy-washiness going on with the market, a couple little tiny fake outs here. We've got a dip. So we're just going to take advantage of that for our 1 DTE, get our call spread in. Let's see where we're going. We want 45.25 or higher. I'm pretty sure we can get that. No, we can't. Okay. So tomorrow's is way down here. So let's see what we can get. We can get 45.05. I like the fact that we're above a round number, so we are going to take that to the bank. We're going to lock that in, load it in the gun, and shoot it towards the target. See if we can get filled, and cross our fingers on that. Market's running away from us, so we might have to adjust. So let's go ahead and get our order sheet up and see what we want to do here. It's walking away from us a little bit, 4,500. Again, we are in fast forward mode, so I can hurry up and get through this. Let's just go ahead and knock it down to 4,500, whatever. It's close enough for paper trading. All right, so I just went ahead and just took 44.95 just to get it filled. Doesn't have to be perfect. It's close enough. So we guys, really quick, when I was cleaning up the trades, I accidentally moved forward to the next day, pretty deep in the next day, and our call spread is gonna get blown out of the water. Okay, I think. And I've really got a sinking suspicion there's some Fed/CPI stuff in some of these days with some of these gaps where I ordinarily just wouldn't even trade it. So I'm just going to confirm that real quick. So let me see, November, where we got blown out, November 1st or 2nd and November 13th of 14th of 2023. I would put half my count down. This is CPI and FOMC. So let's look at the calendar. I already went back a little bit. So November 1st and 2nd, first, FOMC, look at that. Fed funds rate, 2 o'clock, boom. Wouldn't trade on this day. So that first loss that we took, here you go. And the second one, November, 13th, 14th? CPI, right before the market. PPI, I mean. Yeah, CPI here. PPI doesn't really do that, but CPI does. So we're going to get blown out of the water because of CPI. There's no way I would have a trade on overnight here. Something like this, especially with CPI being so heavily in the news, and are we going to get rate cuts and all that kind of stuff at the time. So we do have a trade on. It's going to get blown out, so let me make sure that we have our stop loss on and see what we get for the stop loss. That is going to be this one. Create a closing order. Just know that, but we're going to fast forward it and see what happens with our stop and see the fun ensue. I smoked again, of course, predictably, with this CPI announcement. So maybe I need to take that into account when I'm back testing and actually use the calendar to avoid certain trades. Because had I looked at the calendar, there's just no way I would have put on these trades. So let's see how badly we got smoked here. Woo, boy, $1.53 off of a 60-cent stop. This is everybody's worst fear with 1 DTE trades. But like I said, you see it live, right? You see it right here. You really don't have to worry about overnight unless you got the Fed to worry about or CPI, at least right now. Sometimes it might be oil, it might be, I don't know, whatever. But that economic calendar is definitely your friend as far as figuring out what to avoid. No way I would have traded this. PPI is going to be just fine. I could even show you, I'll skip forward. But sometimes unemployment claims, who knows, but there's always something that's moving the market. One of these red folders is going to move the market. Right now it's CPI, or at least it's still going to be CPI, but right now CPI, okay, and the Fed. So avoid those days, don't trade on those days, and you'll be fine doing 1 DTE, okay? And keep your stops on. Stops aren't going to help you with stuff like this, but economic calendar is. Don't trade on stuff like that. This is 8:30 in the morning. Market opens at 9:30. You're already dead, right? So that's certainly something that you want to watch out for. And again, I don't know how you account for that with back testing. But I just want to see something real quick. I want to see. I did nothing. Yeah. See? So you just have to know what's moving the market, right? CPI moves the market, PPI doesn't. FOMC moves the market. Other stuff, not so much right now, unless it's really, really bad or really, really crazy. All right. So if we did skip what I normally would have skipped, this would have been a fantastically successful test. But even though this is like worst case, right? Worst case, and we're down $500 after what 2 weeks. We're down $500. We don't have any more junk coming up through the rest of the month. FOMC is already done. CPI is already done. So theoretically, we should be in the black for the rest of the month. Just took those 2 hits. If 2 hits is all we took, we still have 1 hit to spare. Actually, we don't have a hit to spare because this hit was super large. But, you know, if we did what we were doing and getting a little extra on those trades that we could get extra on, we'll probably be back in the black. It only took us a week to make up to the 500 or whatever. So, by next Wednesday, we'd probably be back at 0 and then in the black thereafter, right? So just want to put this on film so you can see it live. Obviously, I had no idea what date, what time we were going to. Just pick something out of a hat. Didn't even get that right. And, just wanted to see how it turned out. That's how it turned out. I actually learned a lot. I hope you learned a lot too. Please don't forget to subscribe to the channel and join the Discord where we can have some good discussions in there. Become a member so that you can see all my trades live as I make them. Get warned about that foam C stuff. I'll talk about it, man. I talk about, hey, foam C is coming up. CPI is coming up. Be careful with your trades. Make sure you have your stops on. It's all in there, right? So if you want to avoid stuff like this, join the Discord, okay? We look out for each other in there, okay? All right, I'm out. Bye.
Don't forget to like, comment any questions below, and hit the bell icon for posting notifications so you don't miss out.